Hello everyone, I welcome you in the virtual classroom of business environment. We are discussing unit number 4, public finance. In introductory lecture, I have given you the meaning and definition of public finance. When we are applying the theory of finance to the public income and expenditure area, we term it as public finance. In simple words, we can say that when government raises revenue from the population and spend it for the betterment of population, it becomes public finance. Then we have seen that the role of government is to provide basic facilities in the economy plus to control inflation and recession in the economy. For controlling the inflation and recession, government is having two policies. One is monetary policy and second one is fiscal policy. And out of these two policy, as per our syllabus, we need to discuss fiscal policy. In last lecture, we have dealt with objectives of fiscal policy, and in today's lecture, we are going to discuss tools of fiscal policy. Means by doing what government controls inflation and recession. How government controls recession and inflation, that we can understood from the tools of fiscal policy. As per the chart given here, four tools are there. First one is government expenditure. Government expenditure simply means when government spend for the betterment of public. Then taxes. Taxes simply means public revenue. Government expenditure means government expenditure. Then this is known as public revenue. The third tool is deficit financing. Let me give you a brief view about deficit financing. When government prints new money for the covering the gap between revenue and the expense, then it is known as deficit financing. And the last tool is public debt. When government raises loan, then it is known as a public debt. Now we are going to see that what does the meaning of this four tool means and how these tools are used to control inflation and recession. Let us first of all start with public revenue. This public revenue we have already seen in unit number 3, Indian tax system. It was the last topic under the revenue of central government. Public revenue can be understood from two sense. One is a narrow sense and second is a broader sense. First of all, let us see what narrow sense means. It includes only those sources of income of government which are described as revenue resources. The sources are not subject to repayment. See what is written here, that any income earned by the government from the revenue resources. Revenue means it is recurring in nature. When at a particular time government has guaranteed earning from a particular source, then it is known as a revenue resource. The another point is that whatever government earns, that need not to be repaid back to the public. The examples are given here. Tax is there. Every year government earns tax, so it is recurring in nature. Then fees are there, fines are there. These are known as public revenue. From these three sources government earns, and whatever is there in the hand of government, government will not repay it back in at any point of time. Now let us see what public revenue as per broader sense means. It includes all the income and receipts of government irrespective of their sources. Means from whatever sources, whenever government earns, it is known as public revenue. It includes this revenue resource plus from any area, be it for once in a while, be it for every time. Whenever government earns, then it is known as public revenue. So by another way we can say that narrow sense is included in broader sense plus something more is there. So what more is there, let us read it. Income and receipts of government irrespective of their source. For example, loan raised by government which is to be repaid. In narrow sense, we have seen that the public revenue is not to be repaid, but in broader sense we are saying that something have to be repaid. For example, if government takes loan, then interest on loan is to be repaid, is to be paid, and the principal amount is to be repaid. But it doesn't mean that the public revenue is always repaid. In broader sense, we can include these three: tax, fees and fines, plus we can include loan. So by that way it becomes a broader sense. Then what are the sources of public revenue? This chart is not new to you. We have discussed the same chart in unit number 3, Indian finance system. There we have seen the same chart, and from that unit I have taken it. Public revenue is divided into two categories. One is non-tax revenue and second one is tax revenue. In tax revenue, again, there are two sources, that is direct tax and indirect tax. Direct tax means income tax and indirect tax means property taxes. GST is there, service tax is there. Both are considered as indirect tax. Then in non-tax revenue, it is divided into three categories. First is profit from the state enterprise. If government handles any economic affairs, if government owns any company, if government does any business, then whatever profit owns by government, then it is known as profit from state enterprise. Take the example of railway. If railway earns profit, then it would fall under the category of profit from state enterprise. Likewise, Air India is there, BSNL is there. So many public utilities are there which are under the control of government. Then second category under non-tax revenue is gifts and grants. This is the optional thing, that gifts and grant, when government receives any gift from the citizen of the nation, that is known as a domestic gift. But if government receives any gift from the outside the nation, may from the other government or may from the citizen of other country, then it is known as a foreign gift. Gift is generally given in a commodity, while grant is given in a monetary terms. When you help someone on the basis of money, then it becomes grant. The same thing will apply here. Grants, when government receive grants from other government, it becomes foreign grant. And when central government gives grant to the state government, it becomes domestic grant. And when state government gives to the local government, it also terms as a domestic grant. Then the third category is administrative revenue. Under administrative revenue, further it is classified into three categories, that is fees. When we are issuing license, then we are paying fees in return for giving us the facility of license, that is known as fees. Then fines and penalties, generally charged for the violation of law and the rules. And the last one is special assessment. When government provides facility, and because of the facility, if private property's price increases, then tax charged to that private property is known as a special assessment. These all things we have seen in detail in Indian tax system. Here we are discussing from the viewpoint that how government uses this all to control inflation and recession. First of all, let us start with the tax revenue. Let us discuss the situation when inflation is there. In inflation, how government uses public revenue. Let us start with the tax revenue. Under tax revenue, direct tax is there. What is inflation? Inflation is a situation where market is flooded with the money. where there is a overflow of money, oversupply of money within the economy, which increases the price of the product. In that situation, what government do? Government increase the income tax rates, that is direct tax. When government increases the income tax rates, people's income fall, and to that extent their demand will reduce in the economy, and that will apply to everyone. When overall demand will reduce in the economy, production will automatically reduce. When demand will reduce, then prices has to fall, so inflation will be corrected. Then second tool in the hand of government is indirect tax. Indirect tax simply means the tax charged on the goods and services. If inflation is there, means market is flooded with the money, everyone's income is increasing. At that time, government increases the GST rates and the service tax rates, so that the goods and commodities and services becomes expensive. They are become dearer in a market, and it will not become affordable. So by that way also demand will reduce, and if demand will not reduce, then also when this indirect tax will increase, the part of that price will go to the government's treasury, and automatically the flow of supply of money will reduce in a market. So this is how tax revenue is used to control inflation. Now let us see how the non-tax revenue is used. This administrative revenue and gift and grants are not influential category. Means you cannot force anyone to give you gift and grant, not at all. And in administrative revenue, this is for the handling economic affair in a better way. This administrative revenue is generated. If inflation is there, we cannot increase the license fees. If inflation is there, fines and penalties cannot be increased, and special assessment cannot be increased. It is totally gone by the rule. Inflation and recession cannot be corrected with the help of administrative revenue and gift and grant. So only one tool remain in the hand of government, that is profit from state enterprise. Now you just yourself imagine that in inflation everyone's income is increasing, then what to do with profit? If government handles railway, not if, but government is handling railway, then in inflation what to do? Government should increase the prices of the tickets. Then by that way, government's income will increase. Government income will increase, and the supply of money will reduce in a market. So this is how inflation is corrected with the help of public revenue. Now let us discuss how recession is corrected. Now this is not the new thing, because whatever we have done in inflation, exactly opposite we have to do in recession. Still, let us see it. Let us start with the tax revenue. If recession is there, we are having two tools under tax revenue, that is direct tax and indirect tax. Recession is a market situation where the supply of money is at a lower level. In market, the supply of money is not up to the mark. That is why income of the people is reducing and demand is also reducing. To correct the recession, government should increase the flow of supply and should circulate more money within the economy. So what to do to correct recession? If we talk about direct tax, then indirect tax, the income tax should reduce. When income tax rate will reduce, then automatically the people's income will increase, so they will demand more, and when demand will increase in a market, we can see the inflationary situation on, or in other words we can say that recession will be corrected. Then in indirect tax, the tax rate should also reduce. When the indirect tax rates are reduced, means GST rates are reduced, when service tax rates are reduced, then the products and service becomes cheaper and it will become affordable to the people, so they will increase their demand, and when they will purchase, automatically government's revenue will also increase. Again, gifts, grants, and administrative revenue is a non-influential thing. It cannot be used for controlling recession. So it is only now profit from the state enterprise. In recession, the ticket rate should reduce. Or airlines are there, Indian Airways is there. So they are earning from the tickets only, so ticket rates should be reduced so that traveling becomes cheaper for the people. They will do more traveling, and by that way the money will circulate within the economy. So this is how public revenue is used to control inflation and recession. Now let us see the second tool, that is public expenditure. In public revenue, we are talking about income. So in public expenditure, we will talk about the expenditure of government. In public revenue, inflow is there, and in public expenditure, outflow is there. Public expenditure is the end aim of collection of state revenue. State revenue means public revenue. Why government collects public revenue? To do expenditure. So public expenditure is the aim, is the sole goal of public revenue. Whatever is earned by the government in form of public revenue, it will be directed towards public expenditure. So it is a destiny of public revenue. It involves judicious expenditure of public funds on the most important and socially and economically relevant activities of the state. It involves judicious expenditure of public funds for the socially and economically relevant activities. Public expenditure simply means to provide facilities in the economy. When government provides infrastructure, then by that way also government is doing public expenditure. When road construction is done, then government is spending money behind constructing roads. When electricity is produced, then it is government who spends money behind production of electricity. So why public expenditure is incurred? For providing socially and economically relevant activities to the society. Then the term public expenditure refers to the expenses incurred by the government for its own maintenance and also for the preservation and welfare of the society and economy as a whole. Firstly, it is written that public expenditure is done to maintenance of the own self. Government needs to maintain themselves first of all. Government building is there, government's own expenditure is there, they are having their leaders, politicians are there, government need to give them salary. Yes or no? Then to maintain the law in a society, government needs to incur the expenditure. So these are the expenditure to maintain government itself within the economy. So first use of public expenditure is the maintenance of government, and second use is of welfare of the society. Then whatever funds remains in the hands of government, by that fund the infrastructural facilities will be provided in a economy. It refers to the expenses of public authorities like central government, state government, and local government for protecting the citizens and for promoting their economic and social welfare. It is not like that public expenditure is done only at a central level. Only central government does the public expenditure. No, not at all. When central government earns tax revenue, state government also earns tax revenue, and even the local government earns the tax revenue. We are paying this house tax and the electricity, not electricity but water bill is there. So whatever the tax we are paying to the local authorities, it becomes their income. So from that income they are managing the village and the rural territory. So at every level expenditure is done to maintain the that particular region. Local authority maintains their own village, district. State government will maintain their state, and central government will look after the total country. Then this public expenditure is divided into two categories. One is revenue expenditure and other is a capital expenditure. Revenue expenditure simply means any expenditure which is recurring in nature. See, revenue is having two meaning. Revenue simply means inflow or receipt or income, and revenue also means recurring every year. So here revenue expenditure simply means any expenditure done by the government which is recurring in nature. Every year government has to spend. So that is written here, that component, that expenditure which neither creates asset or reduces liability. By revenue expenditure, nor the asset is created and nor the liability is reduced. Let us see what are the component of revenue expenditure. Firstly, it is written here, payment of interest. If government has taken loan from the society, loan from the public, then interest has to be paid, and you know that interest is to be paid regularly, so it is recurring in nature. Then payment of salaries and pensions to the government employees. If working, to the working employees salaries are paid, and to the ex employees, to the retired employees, pensions are paid. Then grants and subsidies. Grants they are giving to the local government, central government gives to the state and state to the local government. Then education and health services. Government has started school building, but it doesn't mean that the role of government comes to an end. They have to pay salaries to the teachers, then regular electricity bills come, and whatever the fund requires for the maintenance of the schools and college, they are regular in nature. So that is why it comes under the revenue expenditure. Then defense services. Defense service here doesn't mean purchasing the defense equipment, but to maintain defense equipment and to pay the salary to the army, navy, and the air staff. Then capital expenditure. Expenditure which creates asset or reduce liability. In revenue expenditure, asset or liability is not created, but in capital expenditure, asset and liabilities are created. In other words, we can say that any expenditure which are once in a while in nature, means if you are incurring once, now you need to forget it, then it is known as a capital expenditure. Let us see what are components of it. Construction of roads, bridges, and buildings. Once we are building the roads, then at least for 10 years we should forget it. Though ideally should be like this, but it never happens. Even the construction of road becomes the revenue expenditure, because every year after monsoon we need to reconstruct it. But anyway, the reality is, ideally the construction of road, bridge, and building is a once in a time expenditure. Then purchase of land and machinery. Even government purchase land and machinery for handling the state enterprise, but that is also once in a while. Then investment in shares. Government also invest. Then loans to the state and foreign government. If our government is giving loan to the other country, then it becomes loan to the foreign government. And not only foreign government, but if any state is suffering from the natural calamities, like a few months ago only, there was a disaster in the Paschim Bengal, and that is why central government has given loan to the state government to meet the whatever the deconstructions were there. So to come in a regular mode, central government has helped to the state government. Then repayment of loans. If government has taken loan, then when they are repaying the principal amount back, it is also once in a while. So what is the crux of this discussion? This is revenue expenditure and capital expenditure, but we need to see that how, with the help of this public expenditure, inflation and recessions are corrected. In inflation, market is flooded with the money, so should in government increase this expenditure? No, not at all. Government should reduce the expenditure. By that way, the money flow will reduce in the economy and inflation will be corrected. Exact opposite to the inflation we need to do in recession. In recession, government should increase the public expenditure. When government increase public expenditure, the money supply will increase within an economy. Before few days only, there were the news in the newspaper that government has given the booster dose of 75,000 crore to the economy to correct the recession. And where this 75,000 crore will be utilized behind giving the bonus and the pensions to the government employees. Now you may think that how by this way recession will be corrected. If the income of government employees will increase, then they are not going to keep in a treasury. Definitely they are going to utilize it. So when their income will increase, their demand will increase. Festivals are coming, so they will make the purchase of clothes, they will go for traveling. So by that way, the shop owner of cloth and the travel agents and the other services which are utilized by the government servants, their income will increase. So ultimately, when the government employees income will increase, they will spend, and when they will spend, money are coming in a market. So by that way, recession is corrected. Let us see the effect of public expenditure on economy. An increase in public expenditure raises the level of GNP. So when public expenditure increases, then money supply within the economy increases, and when money supply will increase, income is going to increase. When income will increase, demand has to increase, and to meet the demand, production has to increase. So when total production within an economy increase, the GNP is increasing. Then public expenditure increases the purchase of goods and services. As I have given you example that government gives bonus and more salary to the government employees, so their products and services demand will increase. Means increase in household incomes, their income has increased, and when their income is increasing, they are purchasing goods and services, and on goods and services we are paying indirect tax. So government's indirect tax revenue is increasing. Then it increases the flow of funds in the economy. It is the but obvious that by public expenditure, the motive of public expenditure is to increase the flow of money, supply of money to increase in a economy. Then increases private income and thereby private expenditure. If public expenditure is enough in the market and inflationary situation is there, then inflation is a period where everyone is earning, and it is a time period when profit of everyone is increasing. So it is an opportunity to start a new business, so it will fetch the private investment in economy, and when private investment also increases, ultimately the supply of money is increasing within the economy. So this is how public expenditure deals for inflation and recession. So this is all about public revenue and public expenditure. We are keeping our today's lecture here. Remaining two tools we will discuss in our next lecture. Thank you.